stuff. And I know many of us are still trying to get our hands around the movers of Bitcoin in either direction. So stay here with us so you can participate in this. But for more on the Bitcoin rally and this crypto trade overall, let's bring in Mike Bucella. He's managing partner at Neoclassic Capital, also a former trader at Goldman Sachs. So, Mike, Mackenzie laid out a number of reasons why we see Bitcoin going higher. Her last point, to me, is the most fascinating. It's momentum. It starts going higher and just keeps going so. What are your expectations for where the price of Bitcoin is going, and what do you think the biggest drivers are and will be?
Sure. So you'd mentioned 70 million %. The most amazing part of that is that Bitcoin hasn't changed at all. Bitcoin has stayed exactly the same from day one. The world around it has changed quite a bit. And so to think about it a different way, people aren't necessarily buying Bitcoin. They're selling things that aren't working anymore. So it's almost like they're handicapping the global government's ability to navigate the next few decades. It's a live bet on central banks' ability to land the economy. And of course, there's speculation around that. So the price of Bitcoin represents the intrinsic value of Bitcoin plus speculation. And clearly, between meme coins being the best performing assets of the last 7 days, CryptoPunk selling for $16 million, funding rates going through the roof, there's obvious speculation, but the intrinsic value of that option of Bitcoin versus the rest of the world continues to grow. And so I think that's where you're getting a steady base of inflows, but the speculative piece is that kind of day-to-day price fluctuation you see.
Yeah, Mike, it's Dom. One of the things that Mac brought up is this idea that the spot ETFs, the money they're taking in is fueling some of this demand. You're having more, fundamental institutionalized kind of demand coming through. It wasn't that long ago we were talking about black market stuff, right? This idea that we were using things for illicit trade and all of the bad cases for use of Bitcoin was coming about. What exactly, then, does this next leg look like? Does it include that conversation all over again?
Yeah, I just didn't want to repeat the BlackRock and Fidelity comments that everyone said for the last 3 months, but I would say that's obviously a credentialization of the asset class. So we'll use the term financialization of a new asset class, being Bitcoin, being traditional assets, being part of the traditional asset optimal portfolio. So a friend of mine leads crypto and digital assets for one of the largest investment consulting firms in the world. And he had mentioned that Monday was his largest inbound day ever from those institutional clients. And so you have both the retail market, and obviously that's a large part of the market these days, both in stocks and crypto, as well as the institutional side. Everyone's very excited about it. I think, it's definitely changing the scope of public assets. So obviously a lot of viewers of CNBC will be trading things alongside the Bitcoin ETF, but things like miners, Coinbase stock, MicroStrategy, all different drivers. MicroStrat is obviously a Bitcoin whale. Those whales will actually drive some of the innovation Mac mentioned around Bitcoin virtual machines, or the Ethereumization of Bitcoin, because they have the ability to sort of allocate Bitcoin value to those platforms. Coinbase is obviously this decentralized neobank of the future and building on things like Base. And the miners, I actually think, are fairly interesting because there's going to be enormous alpha to be had post-halving. And you're going to look at these low-cost, scalable miners outperforming some of the ones that are going to come into a pretty difficult time. And so I think between all of the assets, there's really interesting opportunities to trade each of them. But obviously the ETF flows have been, the story of the last 6 months.
And can I make one other point on that? What's especially noteworthy is the fact that, the major wirehouses, asset managers, and RIAs haven't even cleared the ETFs yet for their clients. So you're expecting another wave of interest, which kind of goes to a larger point that Mike was just making, is you're going to see a lot of the supply go away. That market-making event called the halving coming up in a couple of weeks, it's naturally designed to create scarcity around this asset.
So let's take us through, because a lot of people, we're still trying to grasp the halving concept. It's this idea that you're not going to have the growth and supply of Bitcoin be nearly as robust as it was pre-halving. Yeah, that's the whole idea.
Exactly. It happens roughly every 4 years, and it cuts basically the supply in half. The new circulation, it's baked into Bitcoin's code, and it's naturally meant to have this deflationary effect. And there's also, one other point that Mike just made. You're seeing a lot more companies building on top of Bitcoin, that layer 2 ecosystem, and they're scooping up a lot of the supply.
All right. Mike Bucella, all of these things are huge, right? But there's still going to be power usage that becomes an issue at some point. We've talked about AI and data centers and how much power they're going to use. How much does cryptocurrency factor into the future energy profile of not just this country, but around the world, if its use is to hypothetically keep going on its trajectory right now?
It is a major part of grid transition to clean energy. And so if you think about whether it be stranded energy or scalable alternative energies. I'm full disclosure, on the board of TeraWolf. We power Bitcoin mining through hydro power and nuclear power, two of the cleanest forms of power in the world, and we continue to scale out those facilities. There's obviously this push and pull now between the Mag 7 looking for alternative power sources for their AI applications and the high power compute that comes across that and demand on some of these data centers. And so I think for a lot of the global Bitcoin miners, they're going to constantly need to seek the lowest cost of capital, or the lowest cost of power, I should say, to continue to mine Bitcoin, because, I mean, it is a clear cut. We've had a run in Bitcoin, but there has been, a cut in supply. And so every, block of Bitcoin you're mining, there's less revenue associated with that. And so I think the low cost miners will have an opportunity post halving to kind of get through their own little distress cycle and either acquire or scale, profitably if they have the ability to do so through scalable mining sources. And that's kind of an interesting concept because, it's a way that most hedge funds have traded the sector for a period of time. And I think there's going to be material alpha generation versus basket trading versus, Bitcoin, 70 million%. They've never had a management change. They've never done any M&A. It's just a beautiful, simple product.